You gonna be
All
what?
all right. Hey, everybody. This is Lane and Dean here. Welcome to the December 2021 monthly market update, where we go over what's been happening in the news across Hawaii and the mainland.
In Hawaii, there's so much to do. There's hula, there's surfing, and real estate too. We just two local guys with so much to say. So listen to the real estate Braddahs today.
Hey everybody, how are we on?
We're on.
Cool. Hey, the vocals came out clearer this time. Last time I heard the guitar, but it sounded muffled. You changed it?
No,
Oh,
no.
same. Oh, interesting. Anyway, everyone, hi. I'm Dean Ueda. We're on episode 46, so by now, hopefully, everybody knows us. I'm a former CPA, now real estate investor and realtor. Check me out my YouTube channel. It's YouTube/Real Estate of Hawaii. Also Facebook and all those other great social media platforms. So jumping right into November statistics for Honolulu. Nothing really exciting today. It's the same information same trends in terms of strong sellers market, and in fact, inventory is going down a little bit even more. So just to go over the stats as we do every month. Again, this information is a little early and it might change compared to what the Honolulu Board of Realtors release on the 6th of the this month. But for November, we have single family homes median price at 1,050,000. No change from prior month, but a 20% increase from same time prior year. Same story with condos and townhouses at median price at 500,000. Another again 19% increase from prior year, but not much change from prior month. Days on market, we actually see a little bit of a flip flop here, where single family days on market we have 12, which is really low, and it's a 9% increase from prior year. But for condos, it actually went down to 10 days. I think previously single family was always had a slightly lower days on market, but now condos are tightening up even more. As for closed sales volume, single family, we had 369 closed sales for November, an increase of 7% from prior year. And condos, we have 593 closed sales for November, a 42% increase from prior year. I like to always show inventory statistics in addition to these three. So, homes available for sale. Again, this is showing the supply side, right? So, single family homes, we have 380 and 982 for condos, and that's a big decrease, almost 40% for single family and 44% for condos. So, and if you look at this, the trends, this goes back to 2019. You see it going up and then coming back down, and it's still on a downward trend in terms of supply side. Yeah. So then on the demand side, or when we tie in demand, month supply of inventory, we have 1 month of inventory for single family and 1.8 months of inventory for condos and townhouses. And again, I like to show the trends, and if we draw a line, best fit line for these both single family and condos, we see a downward trend in terms of the month's supply of inventory, which is not good news for the buyers we have, but great news for the sellers. Yeah. And the slide I showed from last month also is again, I like to compare the supply with the demand and trending it out, right? So this is back as far as 2005. The top line, top graph is new listings, showing, I guess we could say, like supply coming onto market, and then the chart below that is tying in the demand section, right? The month supply, again from 2005. So if you look at the two and you compare the two, I mean, I like to think that the new listings trends, it seems pretty even, except for that blip again back in, I think, 2006 for single family. But I think, sorry, that's townhouses. But if you look at the chart below, which is the month supply, you see it, there's a lot more peaks and valleys and ups and downs, or big ups and downs. And so the way I like to think that says is that new supply is constantly coming on at a pretty standard rate, but the demand is swinging, has bigger swings, yeah. And right now we have a big swing up in terms of demand. So that's again, nothing new. It's same story as we've been talking for a bit. So let's jump into our scam corner. Every month, you guys know I like to talk about scams. So this one kind of is an interesting one because it's kind of great timing because we just had Black Friday. We have a lot of people shopping for the holidays, and it's an Amazon order confirmation imitation scam. So what these criminals are doing, and they're sending out their own version of confirmations of purchases, right? And in the scam, the criminals send you a fake purchase confirmation email that looks like it's coming from Amazon, and you can review the details about the fake purchase, like payment amount and the mailing address, and then you need to click to view or manage. There's a button to click or manage the order, and if you click on the button, it'll take you to Amazon's real site, but you won't be able to find information about that purchase. So the last resort is to call the customer service phone number, which is, of course, a fake number. And then they'll ask you for your credit card and CVV number to cancel the purchase, which sounds fake, right? If you guys know that something shady sounds wrong about that already. So instead of canceling, of course, then you're giving them access to your credit card. So again, these cyber criminals are always looking for new ways to catch you. So, don't fall into it. Some ways to, yeah, so it surprises you, but that's why I like to bring these up, and for young and for old. So watch out for, fake customer service phone numbers. If you need assistance, go to find directly through your own, through the website, and then don't click on links that you weren't expecting, right? Because it could be malicious or have malware. And always don't share sensitive information like credit card numbers or SSN or birthdays over the phone. Yeah. So that's the scam of the month that we to be wary of. So next I wanted to talk about new construction. So one of the new developments is out in Eva Beach. The whole Pili community by D.R. Horton is not new, but this single family home development called Ikena at Whole Pili is. So they actually just had their first released in November last month, and I think they released about 12 homes. So these are single family homes, 3 to 4 bedroom layouts with attached garage, and they're both PV and electric vehicle ready. So there's some great floor plans. If you look at that picture on the exterior, shows again, those are just mock-ups, but it's very contemporary in how it looks from the outside, and some say it's gonna look kind of like if you're familiar with Lico at Whole Pili, which is another single family that came out earlier. That one, the exterior might look kind of similar to that. Right now, there's nothing to see in terms of model homes. So. But what do we have here on the next slide? You'll see on the left, so that red circle with the arrow, that's where Lico is going to be, so it's going to be kind of south, the southern portion of the whole Pili neighborhood. And it's going to be featuring 5 different types. So the smallest is going to be these Elua, which is a 3-bedroom, 2-car garage, about just shy of 1,300 square feet. And then the biggest ones are the Aono configuration, and this is going to be it's going to have an ADU on the bottom floor. So it's going to be like a 3-bedroom, 2.5 on one side, and then a the studio with the one bath on the bottom. So it should be. We're not sure when the next phase is going to be coming out, but if you want more information, you guys can reach out to me. Another fun new construction coming up is called that's coming up in the Core Ridge area. It's going to be some townhouses, and it's called Walea at Core Ridge. So word on the street is this phase 2 and 3 might be being released as early as tomorrow. So if you want to get into this lottery, hit me up. The developers did say it's going to be coming out soon, but they didn't say exactly when. And I'm a little bit of a buzz that it might be tomorrow, and in which case they'll give us about a week and a half to submit your applications. So again, there's as small as 2-bedroom, 2 baths, and big as 3 bedrooms, 2.5 baths, starting at the $650,000 range. So that's some information about a few new construction developments. And some good things about new construction and some bad. Who doesn't like new things, right? So from the pro standpoint, it's, you're getting something, you'll be the first one to bless everything, right? Of course, deferred maintenance, things aren't going to be breaking in the near future. So you have a lot of savings that you can have from not having to re-roof for a while. A lot of times you can pick your own finishes and finishings, flooring, or upgrading countertops, that kind of thing. And this is a potential, but you could have baked in equity. And what I mean by that is, I think, Lane, we talked about this in other episodes where, especially in the downtown, the Kaka'ako, where it would take more like 2 years from the point in time the prices are set and you set your deposit and you're committed. And so by the time your property is actually complete and you're buying it and moving in, it could have appreciated in prices from the time that the price was set. So that's what I mean by potential baked in equity, right? And that's exciting. And what's also exciting is a lot of times these phases, there would be like 15 units available for sale, and there's way over 100 applicants. So there's a strong demand for these, and that's always a good sign, especially when someone is asking me, is now a right time to buy, right? So when you have 100 applicants going for 10 to 15 units, then that's a good sign that the demand is very strong. And if it wasn't to go to you, it can go to somebody else, or someone will be waiting to buy it if you didn't want it or if you had to sell it. Yeah. On the other hand, some negatives is, a lot of times you're buying off of blueprints. Because the market is so hot, developers aren't creating the model homes as quickly as needed. I think Core Ridge, it took maybe like a year or two before the Nanea single family models came up. Also, you're not exactly sure what the neighborhood's going to look like sometimes because, maybe the roads are in, but you don't know where the schools are or going to be, or the shops, or even your neighbors. You don't know who your neighbors are going to be. A lot of times for my buying clients who are buying resale properties, I tell them, let's come check out the neighborhood at night and, scout out what our neighbors are doing and see if that's the kind of place and neighbors you're okay with. So that's, you don't know who your neighbors are going to be because a lot of times, it's all new homes being developed. So that's one of the negatives. But like I said, if you're interested with any of the new constructions, let me know, because I think I did this other video where calculating statistically, sometimes your chances of buying new construction are statistically better than buying a resale. But that's for another discussion. Check out my YouTube channel. But anyway, I digress.
The new construction, I mean, a lot of these, if you kind of look back at like the floor plans, like square footage is a lot smaller. Price per square foot is a lot higher. I mean, that's the general trends, right? Like people can't afford. Everybody wants new. Who doesn't want new, right? Want the newest iPhone, whatever. But y'all can't afford it, so they make the floor plans smaller.
Yeah.
So your price per square foot goes up.
Yeah. One thing to counter that from the developer side, though, is at least one thing that's neat is that the architecture designs are getting smarter. So when you're walking into these model homes and you're checking out these new places that, like you said, have less square footage, a lot of times the way they design it, the open design in the kitchen and stuff like that, it feels a lot bigger than the 1,200 square feet that it. Yeah, you know what I mean. So
Yeah.
that's one positive to counter that.
What's this ADU downstairs? Is that like
Mhm.
is that designed for in-laws or multiple?
I think they never specify like if it could be like for rental too. You know what I mean? Because it's a separate unit to access. So I haven't gone so far to see the association rules if that would be allowed or not. You know what I mean?
Yeah.
Versus
And it
if it
doesn't
has to go to
matter. Hawaii
family.
people are just gonna do it and whatever they want.
Yeah, the bigger question or the bigger concern I think is that I wouldn't mind buying it for long term rentals, but I would probably shy away if I was trying to do like a Airbnb. You know what I mean?
Yeah,
That's
yeah.
a lot
That's just
easier to get policed versus long term renters. It would be less chance of getting reprimanded or you
yeah.
know what
It's
I
just
mean?
not enforceable. I mean, in long-term rental, somebody living in your ADU, whereas the
Yeah,
Airbnb is super. You're very exposed. It's silly to
yeah,
kind of
yeah, yeah,
chance them.
yeah. Because you can say, "Oh, that's my cousin living there."
Yeah, it's part of the family. You know.
Right. So, yeah, that's it for new construction. And but this is our last presentation of the year. I don't know. What do you think, Lane? Did this year go by too quickly, or is the end coming only too soon for you?
Still 2020. Hey.
Yeah, it's all one big mishmash, right?
Yeah. Yeah.
And then what we have Omicron coming here now. I mean, oh my gosh, it's like I don't know. So,
Yeah.
anyways, with that said, too, being that this is the end of the year, it can't come with any more gratitude, and we just had Thanksgiving, and so always this is more a reminder to all, but for me too, I'm always trying to remind myself, try to be my best self. Our time here is short, yeah. So my challenge, Lane, and I don't know, maybe you can help me out on this too, is like having the balance of having gratitude yet being hungry, and I don't know if it's something that's intertwined or whatnot, but I guess trying to have that gratitude, but still being hungry for more, you know. And part of that, I think, is I need to remember what my why is, whatever it is, whatever your folks' why is too. And another fun thing that I always think about is, and I think Lane, your group always also helps me to remember, and the guys in our gang is to try to leave the place a little bit better than how we found it. So hopefully everyone can keep that in mind, and that's something that I'm going to be trying to remind myself towards the end of this year.
Some people, they don't care. It's all up for themselves. So you try and stay away from those people.
All
That's the
right.
goal.
What do you call them? Assholes? Is that what you're saying?
Yeah, I mean, some people are kind of petty, right? Like they like to be cheap, and we were like that at one time, right? We still are, but I mean, some people, they kind of get over that. And they get to a point where it's like you're only here on Earth for a certain amount of time.
Yeah.
Might as well leave it in a better place. And I think you find people that are aligned on that mission, or that
Yep.
have that epiphany. People who
So
are kind of like that are coming out to Hawaii, January 14th to 17th. Dean will be there
there will be,
in
yes.
person.
Yeah.
There are kind of two kinds of people who come and people who don't. It's a pay to play thing. It's not for free. But yeah, I would probably argue that if this is probably the best networking event you're going to see this year, or your money back. I
Yep.
guarantee that. Can't guarantee returns, but you can guarantee you're going to have a good time. But anyway, if you want more details, go to simplepassivecashflow.com/2022 retreat.
Has the Kawaoka stamp of approval.
Yeah. All right. So if you haven't checked out my podcast, go to simplepassivecashflow.com. But let's get going through some of the national headlines here. First, inflation is going up. I don't know. What's one
Oh,
thing that you've noticed that you're paying more for? Gas to
Um,
me hasn't moved up, I feel like, but
yeah, I haven't seen that. I don't know, but I saw that they said it's like six over 6%. Yeah, the inflation rate.
yeah, yeah. I mean, that's just what they report, right? What is the real? What is that website? Shadow statistics for the real inflation rate.
Oh, I
It's
was
going up.
yeah, because isn't the feds are meeting with the House, right? And or is it the one side, and they're talking about uh, potentially easing up on the bond buyback and stuff. But yeah, I don't know.
Yeah, yeah. It's not like the government's gonna move on a pin, right? It's gonna take them
Yeah,
2 to 3 years, in my opinion, to do anything.
yeah.
But so right. So first highlight I'd like to share is CVS Health Plans. They're planning to close 900 stores, focus on digital strategy. This is all part of Amazon's big movement into the pharmacy world, in case you guys haven't noticed. And I also bring this on board because a lot of higher net worth investors, they like to invest in triple net deals as sort of a end game type of real estate investment strategy, which is lower risk and lower return than rental properties and apartments, that type of stuff. And the kind of the saying is, well, go buy a Walgreens or CVS. Well, you can kind of nix that buy because this type of stuff is going to happen in the future.
Because like the CVS is probably like the anchor store of those malls, right?
Yeah, well,
Yeah.
these are normally standalones, right? Because like
Oh, yes, yes, yes.
most mom and pop high net worth investors between 3 to 10 million, they can't afford a whole strip mall. They can
Yeah.
afford like a little standalone Walgreens or CVS pharmacy. I'm trying to think. They don't really have too many of these in Hawaii. The only one I can think of is in Kalihi. You know how I don't know what that mall is. It's one with a really jacked up parking lot with the pillars that are like in every single parking stall. But alongside, adjacent to there, is a standalone
not
CVS Lounge Drugs, I think.
not Kamehameha Shopping Center. Yeah?
I think that might be.
Oh, okay.
But there's a standalone CVS pharmacy. And I think you also see this on the east side too, these standalone. But yeah, like Milani, like you got long strokes in the shopping complex, the shopping strip mall. But
Yeah.
usually the standalones are what CVS likes mostly.
Hmm.
This is a report that your buddies at was it PricewaterhouseCoopers?
PricewaterhouseCoopers.
Yeah,
Yes.
they always like to come up with this every year. I don't know why the heck we listen to a bunch of accountants, but they probably just pay a whole boatload of money to some other smarter consulting firm. But they come up with these different trends and reports. But this one, they're saying that transaction volume poised to bounce back to pre-pandemic levels. Recovery from the pandemic is expected to occur dramatically faster than what transpired during the Great Recession of 2008. While optimistic return for most sectors, all but hotel and the hospitality sector.
Ooh. Dum dum
Dun, dun,
dum.
dun. That kind of impacts Hawaii.
Yep.
Reliability of small multifamily tenant base fuels recovery, and analysis of work from home trends find that small multifamily properties may be less affected than larger properties because fewer tenants can work remotely.
Yay.
Good for us, good for the landlords. Another point for Gene. Yardi Matrix says gateway market rebounds. So the gateway markets are the ones that kind of got beat up over the pandemic because people are like, I don't want to live in San Francisco and pay all this money for this expensive stuff when there's no cool things in the city because we have this social distance. Well, things are kind of coming back to normal. You're having a lot more absorption this last quarter. So not saying it's coming back all the way yet, but it's coming back. I mean, this is why I was actually kind of looking at deals inside of New York City to invest in
Interesting.
because you got to buy. That's what smart money does. They buy when things are down and they get out of things when they're hot.
Right.
Redfin, they overlaid the home prices 2019, 2021 here. If you guys are listening on the podcast form of this, check it out on the YouTube channel, Dean's YouTube channel. But you can kind of see the trends from 2019, 20. You can kind of see the seasonal trend there, the bumps in the summertime, which is typically the hotter months. But I think the big takeaway here is the 2021, once the vaccines really start to roll out at the beginning of this year, how things really start to get moving. Things are still moving up, but
Yeah. And 2020, there was no seasonality or decrease in the winter months. It went up. Yeah.
yeah. Well, things are kind of, you could say that the slack from the first half of the year drove through that slack punch traditionally.
Yeah.
This from Real Page, luxury apartment rent premiums going up once again, higher than the Class C counterparts. So the way logically I look at this is, the pandemic impacted the Class B and the C tenants, mostly the lower end folks. Like a lot of white collar workers, such as ourselves, right? We're kind of lucky, again, have that gratitude that we weren't really impacted very much. I know a lot of people, a lot of investors that have a boatload of money and just itching to spend some money now.
Ready to pull the trigger, huh?
Yeah, hopefully they do it on investments, not like frivolous vacations. I mean, they can, whatever, it's their money. But I mean, there's a lot of people just with a lot of boatload of money.
Yeah.
I mean, and a lot of people are struggling. It is what it is. But this is why you're seeing the rents go up for the Class A a lot higher than the Bs and the Cs.
Just the bifurcation of the haves and the have-nots, huh?
You said it, man.
Yep.
You said it. Which side are you going to be on?
Right.
Apartmentlist.com says rents still rising, but growth has slowed significantly. Still going up. Like 1% is not bad. Especially when, since March of 2020, these 10 places went up by 30 freaking %.
Wow.
Tampa, Florida, Gilbert, Arizona, Glendale, Arizona, Mesa, Arizona, Chandler, Arizona, Boise, Idaho, Henderson, Nevada, North Las Vegas, St. Petersburg, Florida. That went up 30%, which normally over the long term, usually 3% is the average. But there's your Las Vegas, man. If you want to buy a quadplex, let's buy one.
Yeah,
you're gonna run it. I'll just
no. We got property managers. We got boots on the ground, guys, dude. Don't worry about it.
No, I don't. What I mean is, I don't want to play asset manager. I don't want to do that.
Oh, got it.
You play the asset manager.
Okay.
I'll give you your real estate professional status hours, though.
Oh, there you go. I need those.
Yeah. I'm still looking for somebody to run my beach house in Hawaii. So if anybody needs real estate professional status, let us know.
Yeah.
We kind of talked about this earlier. The tech cities, the gateway cities coming back. Why invest in lower middle class housing? Well, the hint is to hedge in case of a recession, but also capitalize on current momentum. Despite the uncertainty within the market, Class C properties are being touted as the best positioned property for economic slowdown by some experts in the market. During a panel discussion at Globe Street multifamily conference here in Los Angeles, panelists discussed the gap between rent rates for Class A and Class C properties and reviewed some of the current trends within Class C properties. I still think you got to stay away from Class A for the most part, because those are the people that get hurt and come down to Class B and C, except in pandemics where people can stay at home.
Yeah, this is a unique correction.
Yeah.
But then from your other slide, the one it showed that slight hiccup in Class A, but then it corrected it and then went above and beyond. You know what I mean? It looks like
I mean, Class A rents are kind of like short-term rentals or hotel industry, where if things are good, you're kicking butt. You're absolutely kicking butt. You look like that one friend who bet on the hardware on the craps table and won big. And then he looks at Eugene and says, "I got a system, man. I systematically go on this stuff."
Right.
But to me, if you're a newer investor, like stick with the cash flowing stuff because you can't sustain a loss. If you got a lot of money to blow and risk, and you're okay losing a big chunk of it, then gamble and go with like high cost of living, rental properties or real estate. I mean, this is why, Dean, I think you and I should just go buy a house on the beach and just speculate the heck on. Like, I mean, Hawaii is like paradise. Now, I'm not a huge. I think the high end in Hawaii is going to do a lot better than like the middle class and below. Because I mean, people can remote work. They're going to move to Hawaii. But I'm talking like $3, $4, $5 million plus houses. But anybody wants to take me up and partner on a beach house, let me know. Here, same thing we mentioned, but different data sources. The 30% of U.S. markets to experience double-digit rent increases in 2020. All the usual suspects that here.
This excites me when it talks about that. You see, when you sing these numbers, these percentage increases, if those hold true, I mean that's quite exciting, especially if you're doing those, the value add plays for those syndication type deals.
But I don't know. Some people are always scared. They always skeptic. You're like, whoa. What goes up must come down, or what are some more negative sentiments? Like, oh, it's got to turn. It all averages out.
Inflation. Interest rates are gonna go up. It's bound to gonna go up.
Yeah, so awesome, cool. Because when the interest rates go up, that means the economy is doing better, and my rents keep going up.
Yep.
Yeah.
You see, I think the jobless rates are so low right now, and like government's been pouring so much money, and that's why I think you had stated in the other slide where we recovered so quickly. And again, I get it. This is a very unique situation, right? But I don't know. That, like you said, guys waiting on the side to pull the trigger. I'm excited for them. At the same time, don't just wait, right?
But yeah, you gotta let them go, right? You gotta lose. You gotta have them. You gotta miss out a few times for you to understand what a clear shot is. I mean, you've seen this before, right? Like, when you saw 2008 come and go, 2010 or 2012, when did you kind of jump in? When did you jump in?
Not till 2011.
Yeah, I was just lucky I jumped in 2009.
Oh, yeah, you're lucky.
I didn't
know because 2009, 2010, I was thinking about it, and that's when I was looking in Vegas, and I was talking to the wrong people. And that's when I told you, I was talking to the guys that were underwater, and they're like, no, you don't want to buy now. Look at me, I'm underwater. And it's like not having that right mindset. So it took me a year to figure out, well, I'm not getting at that guy's price. I'm getting at this way discounted price. So I'm not that guy. I'm a different, you know what I mean?
Yeah.
So it took me like a year.
I even say, like, who cares what the other guy bought it for? I mean, if it works, it cash flows, it works.
Yeah. I was buying it for like 50 cents on the dollar compared to these are like the foreclosures in Vegas. Yeah. This was post subprime, and Vegas had a lot of inventory. So I had gotten Fannie Freddie foreclosed properties to that.
Yeah. But I'm sure when you bought there were a lot of whispers and like, it's going to go back down. It's gone up 20% every year to where it's at now in 2012.
Yeah.
Like there's always so many negative people.
Right. Yeah. Or you're buying in Vegas. It's a desert. You're just gonna build more. I mean, which is a viable. You can't contest that too much. But then I don't know. There's also the issue over there. I understand it. I think, is it water or electricity? I think it's water. You heard about that?
I've heard of that, but I mean, we put a man on the moon.
That's true.
Is the Mars.
That's true.
I think we can get some freaking water 500 miles from California here, you know?
That's a very good point. That's a very solid point.
I don't know. We don't have flying cars yet. We have these really cool like apps and stuff like that though. So maybe we're just misguided. But everybody needs water to drink. So rents in Dallas Fort Worth rocket 15.5% a year. Everybody's talking about these like sustainable build for rent stuff. I think you were kind of talking about this earlier. My thing is like I'm not a huge fan of build to rent. Because like they put them all next to each other and you're buying into places where when things go bad or you know or maybe like the tide, what I think about it is kind of like the tides come up on shore and they retract, right? This is sort of a cyclical type of growth environment where when times kind of retract, these types of new track development areas are the ones that go dark first as opposed to your stabilized, mature neighborhoods. But if you're a developer, you can make some crazy fees because people pay an arm and a leg to buy these types of thing and buy into the narrative. Biden's got his, I don't know what stimulus plan we're on. I mean, this is all fake money, right? I mean, if you're not investing, you're not doing anything, you are losing money because we're just inflating it away. Tell your mom, tell your dad, if they're just sitting on their home equity, we're taking away their retirement from them. Please. Is that too negative? I mean,
no.
No.
That's what I appreciate about you is you wear your heart on your sleeve and you say it, and that's awesome.
Yeah.
That's what I appreciate about you.
Did you see my last YouTube video?
Yesterday's one? No.
I don't know. I just record them and then my folks put it together, but it's like selfish grandparents.
No.
So like the whole premise of the video was, I mean, everybody in Hawaii, well, again, I don't want to say everybody, but plenty of people you and I know have like grandparents or parents that own a house outright because they were good savers. They're cash poor, house rich, and they're living like toe to mouth off Social Security, which none of us are going to have that type of stuff. What's Social Security? Heck, what's a pension? But you know, if you put that money into like an infinite banking policy, make 5% tax free. I mean, what's 5% of $1 million? 50 grand right there. I mean, you put it into some investing, you double that, you make 100 grand a year. I mean, you could grandma can live off 20 grand a year eating Lunchables or I don't know, or ramen noodles or whatever they eat, pho or whatever. But
better than a reverse mortgage, right? Shit.
Yeah. But then you could take that 80 grand after, you know, you pay for those living expenses and the taxes on the house. And you could send 2-3 kids to Marino, you know, or mid-pack.
Mid-pack?
Yeah. I'm just saying, you know, but people choose to cling on to the dogma that they were born. Oh, I don't want to go into debt. I want to pay things off. Just a mindset.
Yeah.
But going back into commercial real estate, 3 dominating trends today: hybrid workplace, supportive employment, well-being. So they're trying to trick people back into the office. You know, gyms, better facilities, social stuff, and then demand for warehouse continues to increase. But you know, the below one, that's hard for the average investor, the mom and pop under, you know, $10 to $100 million net worth to get into.
Yeah.
Infrastructure bill, I mean, it's just going to help it all. Oh, here's one. Here's some negative news, which Adam reports that U.S. foreclosure activity continues to increase nationwide. So this was, you know, we all knew this was going to happen, where the foreclosure rates go up because you can start to foreclose on people now after all the moratoriums are lifted. So that's exactly what's happening. But despite what every single YouTube influencer was saying, the housing market is not crashing.
I'm sure they got a lot of hits that way, though.
Yeah, it works for that. Yeah, but yeah, nationwide, 1 in every 6,675 houses are in foreclosure. Not bad. Most of the people are paying their mortgages.
Yeah.
Top states: Illinois, Florida, New Jersey, Nevada, and Ohio. I think we kind of talked about all this type of stuff. Millennial home buyers fuel the rise of lifestyle renting. The top cities, again, I don't know how they came up with this stuff. Rentcafe.com. They come up with all these like weird top 10 lists that are kind of fun to talk about. I don't know where the heck they get their data, where they get their rubric. But number 1, Indianapolis, Indiana, Las Vegas, Phoenix, Arizona, Oklahoma City, Memphis, Nashville, Charlotte, Columbus, San Antonio, and Louisville. Indianapolis looks a little out of place to me. I think they paid somebody off. But if people want to help me out and you want to get my book for free and the audiobook, go to simplepassivecashflow.com/book. Dean, if you're lonely during Christmas, I read my book to you on video. I don't know if I put a fireplace behind me as I read, but I actually read my whole book and separated by chapters, and it's on that website if you would like to check it out.
And this is not an audiobook. This is a video.
It's a video book.
Oh, there's a term for that.
I don't know. I just made it up. It's a video.
Oh, that's interesting. So you'll keep us warm at night on these cold, rainy nights then.
Yes, they will.
Oh.
Yeah. Although it won't take very long. It's not a huge book because it's pretty simple to do simple passive cash flow.
Oh, interesting. Yeah. I might have to take you up on that, or maybe play it for my son.
Yeah. Just play it in the background. It's PG rated.
Oh, very good.
Maybe
PG?
PG-13 rated.
Are you kidding me? I would think it was G.
No, there's no F-bombs in there, but there might be some other things.
Oh, that makes it more intriguing now.
Yeah. But anyway, you guys, thank you for sticking with us this year. More to come. I think next year we're going to do some more in-person stuff. We're going to try. If you guys are interested in that, let us know. And then go to raaloha.com. And anything else, Dean, you want to promote real quick? Anything you're doing?
No, I'm just doing, like I said, I'm still continuing my YouTube channel. On a total separate note, I'm converting to I'm getting an iPhone. I'm converting from Android to iPhone. How's that?
Oh, cool.
That's a big thing.
Yeah. I added to Apple One. It's like their subscription services.
Okay.
So like, this is a great way if you're cheapo to get like cheap gifts for your friends and or family. So like you can have up to 5 people join, but you get 2 terabytes of iCloud, which is why I did it. But you also get the Apple Music app, which has like really high def audio.
Okay.
It's like where you move your head like this, and then the audio moves based on which way your head is facing.
Oh my goodness.
You get Apple Fitness. So you give to your brother-in-law. And we get Apple Arcade. So you give a slot to your brother-in-law or your sister-in-law, the Apple Arcade. You give the Apple Fitness to maybe your mother or father-in-law, or Apple TV if they're more of a couch potato. You also get that too.
So you can divvy up who you give these different.
Right. Think of it like Amazon Prime, where you can share it with like 3 or 4 people.
Oh, okay.
You get a lot more subscriptions. So I know you're all business, so you just need the iCloud and maybe a little music.
Yeah, well, I'm trying to go all in and figure out which Apple Watch to buy. I'm not buying a MacBook yet, but I'm I'm still excited because yeah, it seems like a lot of even simple stuff like sending videos to my friends, it gets truncated or shortened, And again, this is probably real non-functional, just like nice to have kind of things. But
Hey
I figure
man,
out.
you've been saving your money for the last 2 years, not going anywhere. You deserve it, and you deserve the world's best laptop, which is the MacBook now, like the M1 chip.
Oh yeah,
That thing is like game changer.
oh yeah,
Yeah.
yeah. We'll have
So
to definitely talk offline for that one, or we'll
yeah,
talk at the retreat in January. How's that?
yeah, yeah.
Yeah.
But all right, folks, thanks for listening. Bye.
Bye.